Alrighty, earnings season is just heating up, and United Airlines just came out after the bell here and announced earnings that were lackluster. Now the question is it time to buy United Airlines? I think yes, but we're going to do it in a strategic way, using options and using leverage, with what I think we could generate a return of overall 27%. But that's not what we're looking for. We're going to look to manage that beforehand. But here's a strategic way on how to play United Airlines after earnings for the next 40 days. So, my name is Joshua Belanger. This is another episode of Follow the Money. So, let's take a look here at United Airlines in the chart here. Now, it's coming off the lows here. It's been put on its butt, and here it's been building what technical traders would call a base. So, we have this here. Is it going to go lower? Is it going to go back to 17? Probably not. Is it going to go all the way up to these recent highs here in the next few months? Probably not. So what do we do here? How do we play this? Well, being that earnings just came out after the bell and prices are down a little bit here, I don't know, investors weren't expecting much here. No one's flying, and it's really about what they're expecting going into spring, summer, and later in 2021. Now, what we look at this one here is that we have a base here, a base there, and we're starting to build a little bit of base there. So for those, you could say as a technical trader, we're starting to stair step higher, which is good. You're starting to see buyers come in, sellers already out, and buyers, investors, longer term investors, because if we turn this to a weekly chart, weekly is longer than daily, and here you're starting to climb up there. So how do we play this? Do we want to buy the stock? I would say no. I'm not a stock guy, especially at $45. But it's an interesting play using options here, because what we're going to do and what I'm going to show you is how to sell a put and leverage a lower priced instrument like this, and using the options to play the puts and have probabilities on your side. So let's look at the trade tab here. So I'm not going to go into depth why I picked 37 days. 37 days is a beneficial yield on return on investment. So when you look at this here, what put do I want to trade? Well, the put that I want to sell here is going to be something that I'm going to feel comfortable with. And if you are looking to get long, then you have to build a spot. You have to pick a spot where you want to get long at. Now, I necessarily wouldn't look to get long on these. I would adjust the position differently. But that's where you have to pick your battles. So when you look at something out here, what I would look at is something that has this 41 to 40 strike here with 37 days to expiration. And the reason why is because if you go here all the way to the right here, return on capital is overall, and return on capital for this is selling the put, so you have to put, you'd use margin on this. A non-margin account wouldn't have the same return on capital. So this is for a margin account. For the next, if you sold this for theoretical, let's say at $1.30, for that margin you put up, which is 2 standard deviations on this equity here, you will see a return on capital. If it expires worthless, a return on capital of 27% in the next 37 days. Not so bad. Now, what we have to do is we don't want it to go to expiration. We don't want it to go into that into the last week. You want to manage it before then. So, for instance, if I sold this for $1.30 here, I would be looking to at least get half of that. So buy it back at half of what you sold it for, or 60% of that value. So you want to capture a lot of it, but you also don't want to get into the last week, because that's where things really get haywire. A lot more gamma, and you start picking up pennies and nickels for dollars that really aren't necessary here. So this is the way how I would play United Airlines. Earnings are just, this is after earnings, so earnings are already out. You're not going to have any earnings risk of that. And here we're just looking at just overall picking a direction and looking forward, as Wall Street is forward looking as well, that probably you're going to see buyers or prices of United Airlines and other airlines drift higher. So this is how I would play it strategically. And with a $40 stock, this is a good way to use put options, sell put options. And looking back again here, the probability that you use on this one is you start looking at a probability of touch. This is understanding what can happen throughout the position. it's a 60% chance that prices will touch it. So understanding how to navigate the marketplace and what is expected and not expected is going to help you. But again, what you're looking for on this one is to sell the put, manage it, at least take 50 to 60% of that what you sold, and then move on. So you look for opportunities like that, and you are strategic, not only with playing different underlyings, but also different strategies as well. That's what I have for you today. Make sure you like, subscribe, and leave a comment. See you in the next video.